Pi network has been in the making for many years. People clicked on their mobile phones to mine Pi, and now 3 weeks ago we got the token officially traded on various centralized exchanges. Now the mainnet will launch in 2 days. The question is, what's going to happen with the price? Does it make sense to potentially buy some Pi? Does it make sense to offload everything? Let's have a look at the data most people are not considering. So even without the mainnet launch, Pi is already one of the largest cryptocurrencies. It's at place number 11 with a market cap of 10.6 billion. It's half the size of Tron. It's 1/8 the size of BNB. And the reason why Pi was able to launch with such a high market cap is because of its circulating supply. A lot of the supply isn't yet traded. There's only 7 billion in the hands of people, while there's a maximum supply of 100 billion. And so if you haven't been mining Pi, this is where to get it: on Gate.io, on BitGet, on OKX, and on MEXC. All the centralized exchanges are part of the party. Unless you've been living under a rock, you know that Pi network is a blockchain that can be mined via phone. Now, it doesn't appear as if this mining has any real world usage. People simply just click a button on a phone. There's no real computation happening, very different to, for example, Bitcoin. The adoption though is massive. We've got more than 100 million downloads on Google Play. We've got 4.2 million followers on x.com or on Twitter. And of course, the project is still very much in active development. So this is the GitHub repository. There are regular updates all the time. Some people go a little bit overboard with the mining. Have a look at this short. Most people are not that professionally set up. It seems to be mainly a retail crowd that's following Pi, and unfortunately the expectations are sky high. Pi is already pretty large. How large would it be at $160? Let's crunch the numbers. We are currently at $1.49. 160 divided by 149 is a 107x. Multiplying this with the current market cap of 10.7 billion brings us to 1.1 trillion. Bitcoin's market cap is at 1.6 trillion. This would be 5 times the size of Ethereum. So this is obviously not very likely. Here's the performance of the Pi token relative to Bitcoin since its launch on the 20th of February. First we had our sell-off, then our recovery. Now we're pretty much just in equilibrium. Some critics say that it's not the people that are mining Pi, but it's the team that is mining the people's data. Because in order to claim your Pi tokens that you got every day by clicking on this button on the app, in order to claim, you have to do KYC. You have to send in your personal details. The KYC will be completed on the 14th of March, so 2 days after publishing of this video. And that's also when the mainnet migration happens. And so it will be interesting what happens to Pi in 2 days from now. I think that all of this attention will at least create a short-term rally. How much? Who knows? The upper bound is potentially 90%. But of course, all of crypto is currently not too bullish. So if the rest of crypto is going down, then probably Pi, long term at least, might go down as well, especially since there's not that much supply available right now. In the end, it's a game of demand versus supply. And if the circulating supply is soon going to almost 15x from here, we need to have that kind of demand in terms of real US dollars coming to the centralized exchanges as well. Will that happen in a market where most altcoins are recently red? I have my doubts. Among all the blockchains, among all the layer ones, Pi network is at number 7. Among all the major cryptocurrencies that are made in the USA, Pi network is at number 5. Not all the tokens go to the miners. There's 10% for the ecosystem development, there's 5% for the liquidity fund, and 20%, this is the kicker, to the team. And so the question really is, who's going to buy? If the centralized exchanges can create enough buzz around the project because they got those 5% and they want to sell those 5% for high prices, and if that potentially short-term rising price attracts the people that mined Pi to even buy some Pi, then that could help potentially some adoption. But again, the issue is the general macro environment. The strategy is actually pretty neat. Because have a look at Ethereum relative to Bitcoin. Ethereum performed pretty nice during bull markets because a lot of people were mining Ethereum with their computers, right? So you simply just exchanged your electricity for ETH tokens, and then you potentially also used the Ethereum DeFi ecosystem. You got more involved into blockchain. But then came the move from proof of work to proof of stake, and all those miners had to shut off their rigs, and this constant flow of new investors, of new people getting involved in the ecosystem suddenly stopped. And that's then when Ethereum underperformed Bitcoin by more than 70%. And so Pi is using a similar kind of mechanism, right? Simply by incentivizing people to click a button just to learn about Pi over the long term, by having millions of people following Pi, that can create some demand. The question is, of course, how long this demand will last. Will it be high enough to offset the upcoming token inflation? Long term, probably not. Short term, potentially. Clearly, the overall situation in crypto has changed recently, and there seems to be one event that started it all off. What we've got over here is the Bitcoin price, and this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PaxG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices. But that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management, how to set up those positions, also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly. And of course, feel free to also check out Premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.